Good evening and welcome to the weekend edition. My name is Peter Resnicek from ShadowTrader.net. Kind of a choppy week in the markets with a big 4-day balance that finally towards the end of the week resolved upwards. Bitcoin hit 100,000, but still on that slow grind trajectory, which to be honest with you kind of scares me, as I talked about a little bit last week. All of this happening in the context of a shortened week next week, where I believe markets are just going to slowly grind a bit higher, right? All that and more in today's weekend edition. Onto the charts, which as always is all that matters here at Shadow Trader. We're going to talk about the balance area that was forming last week when we had the weekend edition, talking about the potential to break a bit lower. That never happened. We actually ended up getting a 4-day balance that just kind of broke a little bit to the upside, but not before teasing some major downside action, which is very interesting. And now we have a carry forward of a gap below us. We had a gap above us coming into this week. That one has been filled in the S&P, but not in the Nasdaq, which continues to show relative weakness. Let's take a look at this S&P daily chart so we can just illustrate graphically some of the items we were just talking about. I'm going to firstly box off just the gap. So this gap unfilled here is below us and is very, very important. I want you to continue to carry this forward in your narrative. Even though it's not in play right now, it may well be in play at some time in the future, potentially in December. We don't know that, but carry it forward anyway. But after that, what happened this week is this balance area here, which started out as just a couple of days, turned into 4 days. And as I was saying that it was teasing lower, it was kind of a difficult market to trade this week because notice that you have a touch here. You went kind of a higher low, but then you retested here and never went lower. And then even here midweek on Wednesday, you retested yet again before closing higher. And then Thursday's action, which is really even more confusing, was the fact that you broke out of balance to the upside, went up, came back in. Almost always, according to balance rules, whenever you break out of balance and come back into balance, the target is usually the opposing end of balance. And that didn't happen. As you can see, we only kind of went halfway in, caught a moving average there, and then closed strong on Thursday. And Friday was sort of balancing to higher, making a new swing high there. So markets feel like they are digesting whatever selling pressure is here, and they tend to want to move higher. Now, from a technical standpoint, what's also, I think, pointing to slightly higher prices next week is the fact that we've got a downtrend line from here, and this is in the cash, and we're kind of right at it, and we can redraw another one here a little bit steeper, and you can see that we're starting to break trend, and all this is happening after filling that upside gap. So we've got an all-time higher at 60.1713. I'm not really all that confident that we get there in a shortened week, but it is potential. But really what you want to focus on the fact here is that we filled the upside gap and continued to float higher, breaking a secondary downtrend line here and potentially even breaking a primary there, looking like the market wants to target that 1617 area in the near future. Onto the Nasdaq 100, aka the SOS chart. What does that stand for? Same old story. I feel like we've been talking about this narrative for weeks on end in the Nasdaq in terms of two factors here. One being relative weakness as money is rotating out of technology and into sectors such as consumer discretionary, financials, energy, etc. And two, the fact that we refuse to have an expansion of range to the upside in the Nasdaq, even though there have been catalysts, there have been earnings, etc. We got Nvidia this week, which really was kind of a dud. It was relatively flat. And all that is translating into candles here that are relatively tight and really just not advancing forward very, very much. And notice how much of a divergence there is in between the amount of distance of where the NDX is in current price and that downtrend line which we were just talking about in the S&P, how close we are to breaking and on the way to the all-time high. And that's just not happening here in the Nasdaq, all right? The other main factor here to carry forward is that you have the upside gap, which we were talking about in the S&P, is filling, and it still hasn't filled in the Nasdaq. It's kind of creeping higher and trying to, but you still have a portion of that upside gap that's completely filled. And on the downside, you have the exact same balance area that you have in the S&P. And that balance area here, as you can see, is right up in an uptrend. So getting down there, of course, is going to definitely bring in some sellers. I am very tentatively long on some stuff here, but I'm really starting to favor more stocks that are in the other sectors as opposed to just big tech, because this just does not look that good to me. Be aware that the way markets work is simply that there are players on either side of the market, buyers and sellers, and they are all operating in different time frames. And remember that those that are operating in the shortest time frame, they have the weakest hands, and they will liquidate when they are not getting paid. And I feel like at some point we are going to see some of this coming in tech here in the Nasdaq 100 because people just aren't getting paid. Remember that a market that is a slow grind on a sideways to up trajectory, so to speak, is really accumulating long inventory, right? Just think about that for a second. If prices are moving sideways to up, obviously inventory is accumulating long. Some portion of that long inventory is shorter term traders. They will liquidate first, and then if key levels below us are taken out, longer time frames will start to liquidate then. So just kind of keep that in mind. And all this is happening in the context of this very, very large wedge pattern, top and bottom, both of which were nowhere near touching. So it's really hard to say what the next move is. If somebody asked me sort of gun to the head to make a big bet on the Nasdaq 100 here, I really couldn't tell you. I feel like the S&P is going to probably grind higher and pull it with it, but this relative weakness is definitely something to be aware of. The small body candles, something to be aware of, and just kind of where we are in technicals is also something to be aware of, and that it feels like we're tiring a bit here on this side of the market, and it's not really time to put the pedal to the metal in terms of new longs that are more tech oriented or in the Nasdaq 100. Bitcoin, of course, is the story this week in terms of the key 100,000 level finally being hit at the end of the week here on Friday, 100,170. This is in the current Bitcoin futures contract. That may differ, of course, a little bit from the actual price of the coins, but I like to trade these futures contracts here. And again, I just maintain not enough expansion of range. Trust me, I'm not saying anything bearish here. I don't think there's anything wrong with it, but pursuant to what I was saying about the Nasdaq 100, it's a similar situation, is that there may be, especially once we're at this 100 here, if we don't see further buying next week, it is, I think, subject to some long liquidation. Remember, if there is an asset that has shorter term retail speculative money in it, it would be this one, right? We know there is some institutional interest, and that institutional interest has been growing, of course, with the ETFs, et cetera. All of that is positive, but there is definitely a lot of hot money in here, and we'll see what happens. I mean, is the 100,000 going to satisfy people? Will they be holding, or will they start to liquidate as we start to sort of consolidate around the 100 or back off from it? So again, use caution. If you're in leveraged instruments, as I was, just to kind of put a point on what I talked about last week, I was in Bitcoin futures and MSTR. Those are extremely leveraged instruments. So obviously I got out a little bit early, but I booked a really healthy profit. But when you're in very leveraged instruments, sometimes that's the way to play, as opposed to letting that sort of back off and then taking all of that profit away. If you're holding things like GBTC or some of those other ETFs that are just tracking Bitcoin, it's a lot less volatile. And of course, you can give it a lot more leeway in that sense. All right. So be careful out there, I would say. Everything is stacking properly. But again, the big story for next week and into the end of the year is going to be, how does this market react to this 100K milestone? Does it take it in stride, digest it, and we see 105, 110 or whatever next week? Or do we start to consolidate here? Or do people reject it, right? Do we start to see sellers coming in because they hit their target and some of that shorter term money is going to back it off, all right? Time now for a trade idea. Number one draft pick this week is JP Morgan in the banking / financial space. This is a part of XLF, which, as we know, is the number 2 sector in the S&P. That's probably why some of that chop that's been happening has been happening, because as I've been talking about the relative weakness in XLK, right, which is technology, that's been picked up. That slack, rather, sort of been taken up by sectors such as financials, consumer discretionary, energy, etc. So let's start, before we get into the JPM chart, let's just take a quick look at the XLF chart, how that looks. Looking fantastic. This is kind of zoomed in here on a daily, so you don't see it in a broader sense, but suffice it to say, this is an all-time high. You can see we had a balance area here, and financials broke out, and it's taking a lot of those financial stocks, such as brokerages, banks, etc., with it, and to that degree, JPM is looking really, really good as well, because it is in this sector. It is actually the second highest weight in the XLF, takes up about 10% of the XLF, just behind Berkshire Hathaway, which is the heaviest weight. So let's take a look at the JPM chart right now. Onto this daily chart of JPM. This is a little bit of a zoom in here, but suffice it to say, if we were to pull out, you can, this is all at new all-time highs, basically. So these levels have not been tested before, close to the 250 area. I'm focusing on the fact that This is somewhat of a consolidation area after a gap up, as you can see here. And this is what I call a gap and hold, and it's very bullish. Basically, you gap, and then you spend a lot of time digesting that gap with prices that are sideways to higher. And it looks to me like after this recent pullback here and retest, JPM is ready to move higher, as it should, because the entire sector, seems to be poised to do that, all right? My position here, in order to play that move, I'm not looking for too much here. This isn't all that volatile if you look at the ranges. If we can get from 250 to 260 next week, that would be just fine. And I have chosen a reverse mullet here. As far as my position, this is what I'm doing in weekly options advisory. I like this because of the lower cost and also the fact that it does not have upside risk, and you can also push past all of the strikes and still make money, unlike a regular butterfly, which of course is worth zero if you blow through all the strikes. Like, regular butterflies can be great vehicles for directional trade, but you have to get the distance just right, because as I was just saying, if you go all the way through, it's not worth anything. Whereas with a reverse mullet, as you can see here, long the 250 calls, short the 255s, but then instead of being long the 260 calls, we're actually long the 257.50. So it pushes that down at the top of the spread, thereby giving us a max value of 250 through all of the strikes, or a max value of 5 at mid-strike, and we paid about $1.06 for this earlier today. So the risk reward is pretty decent, and it really just kind of fits in with the thesis of this stock and the rest of the market grinding higher. So JPM for the breakout next week, that's our #1 draft pick. And that's my show for this week. Shorter than usual, because we've got a shortened week coming up next week, so a little bit less to talk about before the shortened week. Enjoy the holiday. When I come back next week, we'll definitely have a longer show, a few more segments. We're going to be talking about monthly charts, of course, because it is going to be the end of November, and try to get a handle on how this market is shaping up coming into the last month of the year. All right, remember, time is ticking in terms of taking advantage of our 6 months free offer for the Live Trading Suite. This is definitely something you want to check out. We're providing this to people through our partnership with Tasty Trade. 6 months free of the Live Trading Suite, which is 2 rooms in one, stocks and options and futures day trading. 9 different moderators, depending on what you want to trade, stocks, options, DTE, zero, futures, etc. We definitely have you covered at all angles. 6 months free if you open an account at Tasty Trade. The links are in the description below. And as of January 1st, this deal is going to be a little bit curtailed, and it is going to be only 3 months free instead of 6. So if you've ever wanted to take advantage of a fantastic offer to get into the Live Trading Suite at no cost, now would be the time. All right. Until then, make sure to hit those like and subscribe buttons. I'll see you next week. And as always, I wish you good trading and good night.